And well, before we kickstart the countdown of the movers and shakers, let's talk about Indian Bank. The company has delivered its numbers. It's been a bit of a disappointment. So let's talk about the numbers with Padmaja Chunduru, MD and CEO of Indian Bank. Thank you for joining in. Let's talk about, ma'am, the first reason, the loss that we have seen in the current quarter. What exactly has led to this loss?
This quarter was a one-off thing. This was an additional provision we made on accounts belonging to a particular group that is in the news now. So this is the additional provision that we had to make this quarter. Otherwise, everything was on track. And I don't think this is a serious issue because it would fortify us for the future. And year on year, there is a profit in terms of overall year, so that should be okay. The growth and the income increase that is seen across the bank should stand us in good stead in the future, and even the recoveries that are coming in and the fresh slippages that are under control, I think would fortify us well for the year to come.
All right. Ma'am, the absolute gross NPA has come in at 13,350 crores. So tell us, what has been the slippage figure like for the fourth quarter, and also recoveries and write-offs in this quarter versus the last quarter?
This quarter, the slippages have been very much contained. If you see the figures that we have uploaded, compared to the Q2, the fresh slippage is half now. It is 1,005 crores during this quarter. And even compared to the last quarter, the slippage has been very well contained, and that is going forward going to help us in improving the performance across the board. Also, the credit cost has come down year on year. This combined with all the recovery efforts that we are making and that are bearing fruit would help us. Also, the NCLT recoveries that we were expecting in the current quarter, that is yet to happen. So there should be at least 700 to 800 crore recovery in the next quarter, or at least in the Q2 of next year. This is our expectation, and I think it would come true.
You know, there's a provision divergence of around 1120 crores for FY18 and GNPA divergence of 179 crores. If you could just explain these numbers to our viewers, and what sort of accounts or sectors were there where there was RBI divergence, and in FY19 could we expect divergence once again?
Let me be very clear on this divergence figure. About the divergence in provisions, there has been one big account which probably was taken in this year instead of last year. This is about 500 crores of a BG that was invoked, and this was actually crystallized in the second quarter of this year. So that RBI had pointed out that this should have been done as of March itself, and that became the biggest factor in terms of the divergence in provisions. The other provision divergences were because of the unsecured, some of the accounts where the February 12th circular of RBI had impacted some assets, and this RBI had come out in their examination and said that these have to be made NPA from a previous date, or the asset classification should be taken at a lower level with a previous date.
Okay, so if you could just share some numbers, for example, what sort of stressed assets do you have on your group and in your books, and from two key entities, ILNFS and the ADAG group, and what kind of provisions could we expect for these stressed assets in FY20?
ILNFS we had already declared, and even in the last quarter, the one or two accounts that were remaining as of December, those have been taken as NPA and necessary provisions made. Similarly, in the case of Reliance ADAG group, all the exposures have been taken into account and necessary provisions have been made. The figures I can give you later, but including even in the last quarter, there was a big group that is in the news, and with various investigations and other news trickling in, negative news. So we have prudently made full provision on the exposures to that group, and that is why the impact on the profits.
All right. Is the NII has improved? How has the margins been in fourth quarter, and is there scope to improve margins in FY20?
Yes, definitely. The NII is now at 3%, and this has happened because of a conscious control over the pricing of the loans, especially in the corporate sector and also in MSME. This risk-based pricing has helped us actually ramp up the improvement in the interest income. If you see the Q on Q for Q4, the interest income has grown by 11% and also net interest income by 8%. This is the improvement that is kicking in now, starting from maybe the last 2 quarters, and this would take the real impact and the real benefits would accrue in the coming quarters. We expect that the NIM would be 3 and upwards. We would like to take it to 3.1 or 3.2. We would work towards it, but I think it's in a very good trajectory.
All right. Well, moving on, how has deposit and credit growth been so far in the fourth quarter, and what's the outlook for FY20?
The deposit growth has been year on year, it has been 16%, and Q4 also it has been 12 to 13%, and CASA has also grown by 9%. I think across the board deposits are showing improving trend. The bank is very well positioned to take advantage of the change in the business climate. It is very strong in the southern states, the 5 southern states, especially in Tamil Nadu, Andhra, Telangana, Karnataka, where we are able to improve our presence and improve our penetration into all areas, even rural and semi-urban. These contribute a major part of the CASA and also the deposit base for the bank. So going forward, we see deposits growing and growing at a healthy clip.
Okay, and there have been some cases of consolidation in PSU banks. Is there any discussion with the government on any possibility of M&A activity for Indian Bank?
No, we are not. There has been no discussion with us. However, if at all such a situation arises, I think Indian Bank is in a very strong position to hold its ground and be in the position of an anchor bank if at all there is a move towards any further consolidation. Given the strength in the southern states and the kind of market share, I think it would work.
All right. Okay, Padmaja, thank you for joining in then and explaining to us what exactly has happened in the fourth quarter for Indian Bank.